People haven't caught it yet. Just hours ago, a stimulus update quietly shifted direction. The relief plan you thought you understood has been revised, adjusted behind closed doors. And now the biggest question is this: who actually gets paid and who doesn't? If you're feeling confused, frustrated, or even a little anxious about money right now, you're not alone. Prices are still high, bills keep coming, and for millions of Americans, every update like this matters more than ever. Now, this is not hype. This is not a rumor pulled from social media. This is a real shift that could affect your bank account, your benefits, or someone in your family. But here's the truth, and this is important. Some people are positioned to benefit sooner than expected. Others may assume they qualify and find out too late that they don't. And that's why you need to hear this all the way through. Because once you understand why this relief plan was revised, everything starts to make sense. Why officials change the rules, why the timeline matters, and why what happens next may surprise you. So stay with me. In the next moment, I'm going to break down what triggered this update, why it's happening right now, and how it could directly affect you without the confusion, without the jargon, and without the panic. Now, let's talk about what's actually happening because this update didn't come out of nowhere. Over the past few weeks, pressure has been building quietly in Washington, not from headlines, but from numbers, inflation reports, cost of living data, rent increases, grocery prices, energy bills. According to internal budget reviews released late last week, average household expenses are still running 12 to 18% higher than they were just 2 years ago. And for people on fixed incomes, that gap is crushing. That's where this revised relief plan comes in. Originally, the relief proposal drafted back in early November focused on a broad stimulus approach, wide eligibility, faster distribution, simple qualifications. On paper, it looked generous. But behind the scenes, officials started running into problems. First, funding limits. The Congressional Budget Office flagged that the original framework would exceed allocated relief reserves by nearly $38 billion over the next fiscal cycle. Second, timing. Treasury officials warned that issuing blanket payments could slow down existing benefit systems, including Social Security processing and tax credit reconciliations. And third, and this matters, political pressure. Multiple lawmakers from both parties publicly acknowledged that previous stimulus rounds, while helpful, were too broad, sending money to households that didn't urgently need it, while others were still struggling to keep the lights on. So, the plan was paused, reviewed, and quietly revised. Here's the key change you need to understand. This is no longer a one-size-fits-all relief package. The revised plan shifts toward targeted payments designed to reach specific groups faster instead of spreading funds thin across everyone. Now, before you get too excited or too worried, let me be clear. This doesn't mean fewer people automatically lose out. It means the criteria matter more than ever. Under the updated framework, relief funds are being redirected toward households showing documented financial strain, including income stagnation, benefit dependency, or cost of living vulnerability. That includes people tied to federal benefit programs, that includes retirees, that includes low and moderate income workers. And yes, that includes many people watching this video right now. But here's where confusion starts. The revised plan uses existing data, not new applications. That means agencies like the Treasury Department and the Social Security Administration are pulling from records they already have on file: income reports, benefit status, tax filings, and eligibility history. Officials involved in the process say this was done intentionally to speed things up. In their words, we don't want people filling out forms while bills are overdue. Now, listen carefully to this next part because while this speeds things up for some, it creates blind spots for others. If your information is outdated, if your income changed recently, if your filing status doesn't reflect your current situation, that's where people could be surprised. This is why the relief plan revision matters so much. It's not just about how much money is being discussed, it's about how eligibility is determined. Another major shift involves payment timing. Instead of a single nationwide release, the revised plan uses phased distribution windows. Officials familiar with the timeline say payments would roll out in structured waves, starting with the most financially vulnerable groups, then expanding outward as funding allows. That's a huge change from past stimulus rounds, and it explains why some people may see deposits earlier while others are told to wait. Now, rumors online are already flying. Some posts claim everyone will receive a check within days. Others say the program is dead entirely. Neither is true. The reality sits in the middle. The relief plan is very much alive, but it's leaner, more focused, and more controlled than before. One senior Treasury advisor reportedly said, "This isn't about headlines, it's about sustainability." And that tells you everything. Officials want a plan that can adjust if economic conditions worsen and scale back if inflation spikes again. So, where does that leave you right now? It means attention matters, because the next phase of this plan doesn't depend on what you hear on social media. It depends on how your situation fits into the revised criteria. And that brings us to the most important part: who gets paid, how much, and when. Now, this is the part everyone cares about. So listen closely, because who gets paid under this revised relief plan depends on a few very specific signals, and missing even one of them could change your outcome. Let's break this down clearly, without the noise. First, if you currently receive Social Security benefits, retirement, SSDI, or SSI, you are firmly on the radar. According to officials briefed on the revised framework, beneficiaries receiving under $48,000 a year in combined income are prioritized in the first payment wave. That includes millions of retirees living on fixed monthly checks. It includes disability recipients whose benefits haven't kept pace with inflation. And it includes SSI recipients who are already at the lowest income thresholds. For this group, the relief amount being discussed ranges between $600 and $1,200, depending on income level and household size. Now, before you get too excited, timing matters. These payments would not arrive all at once for Social Security recipients. Deposits would follow the same method you already receive benefits: direct deposit or direct express, and would likely align with your existing payment schedule. That means some people could see relief earlier, while others may wait an extra cycle. Next group, low and moderate income workers. If you filed taxes last year and reported an adjusted gross income below $75,000 for individuals or $150,000 for joint filers, you are likely included, but not automatically. Here's the key difference. This time, eligibility is being cross-checked with earnings consistency. Officials want to identify households whose income has remained flat or declined, not those who experience temporary spikes. That's why some people who qualified for earlier stimulus rounds may not qualify this time, and others who missed out before could now be included. For this group, projected payments range from $500 to $1,000, with additional amounts for dependents. But here's the part most people miss. If your income changed significantly in the last 6 months, job loss, reduced hours, medical leave, that may not yet be reflected in the data being used. That doesn't mean you're excluded forever. It means timing becomes critical. Now, let's talk about families and dependents. Households with dependents under 18 are being evaluated separately. Under the revised plan, dependent-based relief is structured as a supplement, not a base payment. That means it's added on top of individual eligibility, not issued on its own. For qualifying households, that could mean an additional $200 to $300 per dependent. However, eligibility here is tightly linked to tax filing status and custody reporting. If there are discrepancies, shared custody, amended returns, or recent changes, payments could be delayed until verification is complete. And yes, that's frustrating, but it's also why officials slowed the rollout. Now, let's address a big concern. What if you don't receive federal benefits and don't fall into low-income brackets? This is where expectations need to be realistic. Middle income households above the primary thresholds are not prioritized in the initial phase. That doesn't mean they're permanently excluded. It means they are positioned in later review stages dependent on remaining funds and economic conditions. One internal memo described this approach as responsive relief. In simple terms, the plan is designed to expand or contract depending on how the economy performs over the next few months. Now, listen carefully to this part. No new application process has been announced yet. Payments are expected to be issued based on existing records, Social Security data, IRS filings, and benefit enrollment databases. That's good news for speed, but it also means accuracy matters. If your bank information is outdated, if your mailing address changed, if your filing status is incorrect, those are the things that cause delays. And delays are what fuel panic online. Which brings me to something important. There is no official confirmation of exact payment dates yet. Anyone claiming specific deposit days right now is guessing. What we do know is that officials are aiming for early-stage disbursements once the final review is completed, with phased payments continuing after that. So if you're expecting immediate money, slow down. This plan is about precision, not speed alone. And here's the reassurance. Relief plans like this don't usually end with one wave. They evolve. As data updates, as economic conditions shift, and as pressure builds, adjustments follow. And that brings us to the final piece. What happens next? What signs to watch for, and how to stay ahead instead of stressed? Let's finish strong. Over the next several weeks, agencies involved in this revised relief plan will be watching the same things you are: inflation numbers, employment data, consumer spending, and most importantly, public pressure. According to officials familiar with the timeline, the next key moment comes when the Treasury completes its final data alignment with the Social Security Administration and the IRS. That review determines how far this plan can expand or how tightly it needs to stay focused. If inflation remains elevated and household stress continues, additional payment waves become more